If you are struggling to turn a profit in Forex, I want to show you how to use this pivot point hack for day trading in this video. Often, traders struggle with determining trends, support and resistance, and knowing when to enter or exit the market. In my earlier days, I struggled to put everything together. I learned about trend indicators, support and resistance indicators, and tools like Fibonacci and trend lines to enter into positions. I knew all about them, but I didn't know how to combine them into a highly profitable trading strategy. If that has been your journey so far, then I'm glad you found this video, because this pivot point hack that I'm about to show you will combine everything for you: the trend, support and resistance, and even when to enter. If you stick with me until the end of this video, I promise you will walk away knowing how to integrate all aspects into one seamless strategy properly. How about doing me a small favor and smashing that like button and subscribing to this YouTube channel so that we can reach more struggling traders like yourself. We also do a giveaway for every single video, and if you're interested in participating in our giveaway, you can find the instructions in the comment section down below. Now, in case you do not know what the pivot point is, it is a leading indicator, meaning that it has predictive powers. What makes the pivot point reliable is that it is based purely on price. It plots out lines that represent important levels in the market. Now, how these levels are calculated is beyond this video scope, but if you'd like me to cover that in a separate video, let me know by leaving a comment down below. For this strategy, we will be combining it with another volume-based indicator, which I will introduce shortly, so keep watching to find out what this is. Now let's take a look at the pivot point. This strategy involves focusing on the main pivot point. Yes, there are other lines plotted by the pivot point indicator, such as the R1, R2, S1, S2, and so on and so forth. But I want you to pay close attention to the main pivot point, labeled as P over here. In an uptrend, you want to buy at the main pivot point P, and in a downtrend, you want to be selling at the main pivot point P. So for this reason, it is very important to focus on the main pivot point and not get distracted by the other lines. The main pivot point can also be viewed as the point where the largest trading volume takes place, and therefore price reaction to that level can give us a good clue about the market. If the market sits above the pivot point, you want to assume that the trend is bullish and look for buy opportunities only. Conversely, if the price is sitting below the pivot point, you want to assume that the trend is bearish and only look for sell opportunities. Earlier on, I promised you that this pivot point hack will show you how to identify trend. By looking at the market in this manner, it bypasses the need to identify swing highs and lows, which is the usual process to identify market trends. This is a foolproof way to determine the trend, and there's no subjectivity involved. Two individuals can look at the same chart and arrive at the same conclusion. Now that we got the trend aspect nailed down, let's talk about objectively identifying support and resistance. This portion is crucial because it determines where you enter and how you take profit and manage your risk. So pay close attention and keep watching. I previously mentioned that you want to buy or sell at the main pivot line, so that is where you will look for an entry. Again, there's nothing subjective about this, and the level is plotted out for you. Let's take a look at this example where price is above the main pivot line. And because it is above the main pivot line, we want to look for buying opportunities. We see that price pulls back to the main pivot point and we enter a long trade. In this case, your immediate profit target will be R1. If price continues to trend and breaks R1, your next target will then be R2. If R2 is broken, then we have R3 and so on. This is a very simple strategy that is systematic. You will know whether you should be buying or selling, the levels to trade and the levels to exit at. But here's the drawback of just using pivot points on its own. In a ranging market, price will flirt up and down between the main pivot point. This results in many whipsaws, and thus you need to filter out the signals. So this is where the volume-based indicator that I mentioned earlier comes in. This volume-based indicator is the money flow index indicator. Don't miss out on this portion and keep watching, because without this indicator, you're going to get whipsawed and lose money. So this is crucial. I've previously talked about the money flow index, and is otherwise known as the volume-weighted relative strength index since it incorporates volume. I will leave a link to that video on the top right corner and at the end of this video. If you have not watched that video yet, please do that after this video, because I don't want to turn this into a 30 minutes long video. In a nutshell, this money flow index indicator is superior to the relative strength index and is interpreted the same way as a relative strength index. You want to use the default setting, which is the 14 period. You also want to mark out the 50 level, which I've done so here. In order to filter out market noise, we want to use the 50 level as the reference point. We also want to pay attention to the overbought and oversold levels, which is the 80 and 20 region respectively. If the price is above the period point and the 50 money flow index level, we can buy as long as the money flow index doesn't hit to the overbought region of 80. If you see that price is above the period point but the money flow index is below the 50 level, then you want to avoid trading the signal. The opposite is also true. We can sell if we see price below the pivot point and below the 50 money flow index level, as long as the money flow index doesn't hit to the oversold region of 20. So let me do a quick recap of the entire strategy before providing you with some examples of implementing it. You want to load up the pivot point indicator and determine if price is bullish or bearish. You do this by watching the main pivot point and where price is trading relative to that. If price is above, you want to be buying, and if price is below, you want to be selling. Then you load up the money flow index and confirm that the index is above the 50 level if you want to buy and below the 50 level if you want to sell. So right here, we have a chart where price is sitting above the main pivot point, and therefore we want to buy. Price pulls back to the main pivot point and the money flow index is still above 50 and not in the overbought region of 80. We enter upon seeing a bullish candlestick pattern and set in our stop loss below the swing low and the take profit level. You don't have to lock in full profits at the first R1, but I recommend shifting your stop loss to break even when price hits the first level. Here's another example where price does a breakout of the main pivot point rather than bounce off it. We have price trending down and breaks the main pivot point. Looking at the money flow index, the index is below the 50 level and not at the oversold region of 20. Your entry, stop loss and take profit will look something like this. Now, because this is a breakout trade, you want to have your stop loss above the breakout candle with a buffer. In the examples I provided, you may or may not have noticed that the examples are based on different time frames. Therefore, I strongly advise that you backtest this strategy on different time frames and currency pairs to see the best combinations that work for you. This strategy should keep you on the right side of the market majority of the time. It is, however, not a holy grail. So please apply proper risk management and never risk more than 3% per trade. I want you to test it. Let me know if it works for you in the comment section below. And if you discovered other ways of improving this pivot point trading strategy, I would love to hear your thoughts. And that's all I have for you in this video. I hope I delivered on my promise and you got value. Remember to like this video, subscribe to the channel and comment with the emoji plus win Forex signals to enter yourself into our giveaway. The winner will be announced in the next video, so turn on the notification bell and check to see if you have won. I will leave the link to the money flow index video here, so check it out by clicking on the end screen over here.